Welcome back. In today's video, I'm going to talk about the RDSP, or the Registered Disability Savings Account. This is Canada's sort of least used registered account and possibly the most complex to start as well. But despite its complexity, this is probably the most beneficial registered plan in Canada. It can pay out more than the RESP can even pay out. So it's very worthwhile to open an RDSP if you can. The RDSP has the potential to give you up to $90,000 in government grants and bonds, which is huge. Now, one of the reasons that this is a little complex is because there's a certain criteria that needs to be met before you open the RDSP. So you can see here that you do need to be a Canadian resident. You have to be under the age of 60. You have to have a valid social insurance number, and something that's different than all the other registered accounts is you need to be approved for the Disability Tax Credit, the DTC. I'm not going to go very deep into the DTC in this video. It is a program that is very underutilized in Canada. Not very many people that are eligible to receive the DTC actually have signed up for it. But if you qualify for it, you can get a tax credit for up to $9,872 plus an additional $5,758 if the tax holder is under 18 years old. That's a significant tax savings with this program. Many professionals can certify the eligibility of the DTC. Medical doctors, nurse practitioners, optometrists, audiologists, occupational therapists, physiotherapists, speech pathologists. So there's many professions out there that can certify you for the eligibility of the DTC. So it's well worth your time to try and get that. Now back to the RDSP. If you do meet the criteria for the RDSP, the amount you're going to get back in government grants and bonds depends on your family income if you are 19 or older, or your family's income if you are 18 or younger. And when the government gives out their bonds and their grants, they actually look at your salary or your family's salary 2 years ago. So if you happen to open an RDSP in the year 2024, then the government would go back and look at your 2022 salary to determine your eligibility for your grants and your bonds. Now let's look at the grants. These can be significant. In 2024, if your family income is less than or equal to $111,733, then on the first $500 that you contribute to the RDSP, the government will put in 300% of your contributions. So if you can max that part out, let's say you put in $500, the government will top that up with an extra $1,500. Then the next $1,000 on top of that, the government will give you 200%. So if you put in an extra $1,000 on top of the $1,500, the government will give you $2,000 extra. So if you were to put in $1,500, the government will give you $3,500 extra, turning your $1,500 into $5,000. That is very, very significant. But again, your family income must be under $111,733. What if you make over that $111,733? Well, then the government will match any dollar up to $1,000. So if you put in $1,000, the government will put in $1,000 as well, turning your $1,000 and doubling it to $2,000. You can contribute more than the $1,500 or the $1,000 depending on your income. It doesn't matter. You do have a maximum contribution of $200,000 over the lifetime of this account, $200,000. If you happen to put in the $200,000 in one shot, you won't get any of the grants. It only applies on the first $1,500 if you make under that $111,000, or the first $1,000 if you make over the $111,000. There is also a maximum grant limit, which ends up being $70,000. So the maximum grant the government will give you for free is $70,000, whether you're above or below that $111,000. It doesn't matter. The maximum grant you can receive is $70,000. Again, as I'm using this $111,733, that's the 2024 number. It always goes up with inflation, so keep an eye on that. Another thing to note about this account and the grants is that the government will match any contributions until the year you turn 49. Once you turn 50, you can still put money into the account. You can continue to contribute, but the government will not give you any further grants. So the grants can be fairly significant. Again, up to $3,500 if you put in $1,500, but there's also government bonds that are available. These are for lower income families. If your family income is under $36,502, then you're automatically eligible for the government bond of $1,000. You don't have to do anything. You don't have to contribute any money. You just have to have an account open, and the government's going to give you $1,000, making a family income of less than the $36,000. If you make a family income of between $36,502 and $55,867, then the amount of your bond will depend on some formula that the government has created. And as you get close to that $55,000 mark, the less of a bond you're going to get. So you can start at that $1,000, and as you make more, once you hit that peak, $55,687, then you'll stop receiving the bond. And anything above $55,867 will lead to no bond at all. There is a lifetime maximum of this bond as well. It is $20,000. So to max out these grants and bonds, if you make, or your family makes, less than the $55,867 and you contribute $1,500 per year for 20 years, you will have earned $70,000 in free grants, $20,000 in free bonds, totaling $90,000. So you contribute, or your family contributes, $30,000. The government gives you $90,000, and in total you would have $120,000. Then that's not even counting the growth or the interest on the account. Something else to be aware of as well is that there is a 10-year carry forward rule. And so if you open an RDSP and in the previous 10 years, you were also eligible for bonds and grants, you can receive some back payment for those. The bonds are straightforward. If you were eligible for the bonds over the last 10 years, then as soon as you open it and apply for the 10-year carry forward, then you would just get that extra $10,000 or whatever you happen to be eligible for, deposited right into your account right away. The grants are a little bit different because there is an annual limit of $10,500 per year on the catch-up policy. So if your family income was less than that $111,000 in the previous 10 years as well, then you were eligible for $35,000 of catch-up room, but they won't give you that $35,000 at once. You're going to have to do it in increments of $10,500. So over the next 4 years, you will catch up on all those lost grants that you were eligible for. That's how the RDSP works to get money from the government. What happens when you want to take money out of the account? The big thing with this account is that it was made with the intention to help you with your finances when you get older. So you're actually not supposed to withdraw any of this money until you reach 60 years old. If you decide to withdraw money from this account before you're 60 years old, there's some big financial consequences to that. The government will charge you $3 in grant money for every dollar you pull out. That is very significant. The maximum fee you could pay is the total amount in grant money. So let's say you've earned $10,000 in free grant money. That means the largest fee that they could charge you was the $10,000. If you continue to withdraw money, they wouldn't charge you any more for it. But that just means that if you take out $3,333 as a lump sum before you're 60, then they're going to charge you $10,000 in government grants, which is very significant. There are some exceptions. The rule is that if you have received any government grants within the last 10 years, that's when the fees are applicable. But if you have not received any government grants in the previous 10 years, then you can actually take out money without those fees. So let's say you were 40 and you wanted to take out some money from your RDSP, and the last time you received a government grant was when you were 28. Well, that was 12 years ago. You are able to take out some money from your RDSP with no fees. But if you're 40 and the last time you received a government grant was when you were 35, then for every dollar you take out, you will be charged that $3 in government grants. Now, let's say you are 60 years old. This is when you are allowed to start drawing money from your RDSP. This was the age in which the account was made to start with your withdrawals. You have two choices: the DAP, the Disability Assistance Program, and the LDAP, the Lifetime Disability Assistance Program. The DAP is basically a lump sum payment, and the LDAP is basically creating a pension for you. The DAP is there and you can take out a lump sum if your total contributions are larger than the government grants. So let's say you've contributed $30,000 over the lifetime of this account, and the government has given you $20,000. That means your contributions are larger than the government grants. You can take out a lump sum out of this account, and that's okay. If your contributions are less than the government grants, so let's say you've put in $20,000, but you've received $30,000 in government grants, then it's really hard to take any money out. There is a formula, and you might be able to take out a little bit, but generally you won't be able to take out very much or anything at all. What most people do is they take out the LDAP. So what happens with the LDAP is they take the amount in the RDSP and they divide it by how many years it takes until you are 83. So let's say again you're 60 years old and you have $100,000 in the account. So what you would do to find out how much you could take out is take the $100,000 that was in the account, divide it by 23, because 83 minus 60 is 23. And when you're 60, you could take out $4,374. And then when you're 61, whatever's in your account now, you would divide by 21 and then divide by 22. There's a calculator here that is available to you, and it can approximate how much you can take out from the account. So basically I just put an individual or family member that opened this account. Let's say I have a 10-year-old child that I've opened this account for, and I started it this year in 2024. And let's say that yes, they're eligible for the DTC and they qualified in 2024. Again, I'm just making up these numbers. And let's say I had a family income of $150,000 currently. And let's say I wanted to contribute the $1,500 until the age of 49. Once the owner of the account reaches 49 years old, the government won't give you any more grants. So I'm just going to stop there in this example. And I've just set it so that we earn 5% interest rate while we're contributing to the account. And when the account holder reaches 60, we're going to go a little more conservative and it's 3%. And there won't be any lump sum contributions. And I just put the withdrawal starting at 60 years old, and I'm not taking out lump sums either. And then I just hit calculate, and it shows you what's happening to the account. So you can see my first withdrawal would be $23,000 when I was 60, or when the child was 60. And the average would be $32,000. And the last withdrawal at 82 would be $44,000. Then you can see how much in government grants we've received in bonds. And so in this example, there was $40,000 in grants and no money in bonds because of the salary that I chose to input. You can also click on show, and it's got the withdrawals that you're allowed to withdraw from this account until the age of 83. There are actually not very many financial institutions that have RDSPs. I know Questrade, Wealthsimple, Qtrade, those are the big three when I'm talking with DIY investors. They don't have them. It's mostly the big banks and insurance companies that have these. Here's a list of all the institutions that do offer RDSPs. So you may have to invest in the company's mutual funds or something like that rather than doing a low-cost ETF investment. But the government grants will far outweigh the fees that these companies charge for their investments. Another thing you should note about this account is that if you have opened an RESP for a child and they no longer go to post-secondary for whatever reason, it doesn't even matter why they didn't go, but you can actually roll the RESP into the RDSP. You would lose all the government grants from the RESP, but then you would get all the tax benefits from the RDSP. And the RDSP, when you're withdrawing your contributions, the portion that you put in, there's actually no tax on it at all, but everything else will just get taxed in the hands of the account holder. So all the grants, the bonds, the growth of the account, all those would be subjected to the income earner's tax bracket. If you do decide to roll over an RESP into the RDSP, it should be also noted that whatever you rolled over into it does count towards that $200,000 contribution limit. So do be aware of that. So I do hope that this video has shown you the benefits of the RDSP. There are many benefits to this account. It's a little known account in Canada, but it's very valuable. I did not go very deep into the DTC, the disability tax credit, but do make sure you apply for that if you think you're eligible. And if you've enjoyed this video and would like to stay informed of some of my other ones, please subscribe below and have a wonderful day.